All right. 5 seconds in, and we've already said great start. Just making this video. It's been 6 months since I last uploaded, and a little bit bored tonight. Just finished work at 8. I don't know if you can see the time on my screen. I don't think you can. But yeah, we're just going to talk about where I think the market's going, and I'm just going to use this YouTube channel as more of a journal aspect, I'd say, as something I can look back on. Yeah, different predictions I make, different analyses of the market. And yeah, just use it as a way to keep myself accountable. I feel like often you can make predictions in your head or claims, and as times pass, they turn out to be incorrect. But because you never wrote them down or never expressed those opinions to other people, there's nowhere for you to be held accountable. Not accountable, but held to realize that your calls were incorrect or were correct. And I'm just using this YouTube channel now as a journal to help me, I guess, think through different ideas I have about the market in my head, process different things, because I believe that teaching something or talking about something is going to increase your wisdom on the topic. So yeah, been 6 months since my last video. Hopefully after this one it's not 6 months. Hopefully I'm more diligent and I do a video sooner. I'm going to put these on because otherwise my eyes will get fried. I keep looking up because I've got another screen up there. It's got my fat head on it. All right, so let's get into it because I've been fucking around too much already. So what we've got here is the S&P 500, and the blue line is the oil price, UK oil, which I should know this, but I assume the UK oil price is in euro. Euro question mark? Doesn't it matter? Anyway, the point I'm getting at, and the point I want to start with for this journal, is these grey sections you can see that are highlighted over the S&P 500 are recessions. So if we go like this, alrighty. So these are all the recessions here. We've got the oil shock back in 1990, dot-com bubble in the early 2000s. We got the real estate induced recession in the late 2000s, financial crisis, and we've also got COVID recession. Okay, let's put this on so you can see my face. So what you'll find with these recessions is the price of oil spikes as these recessions are induced. And the reason I am starting with this topic is because when we come to today, we can see that oil has spiked quite a fair bit as of late. Anyone that is not living under a rock would know this. It is roughly, this isn't the US price, because the US oil is trading at $96, so apparently this is 103. But as we can see, oil has been on a bit of a tear since December of last year, and has really picked up pace in the last couple weeks. Now, if we look back at all these recessions, right, we can see the earliest one we have here is 1973. Oil price skyrockets as we go into a recession. The recession in the early 1980s, oil price spikes up quickly, has a very good run, really for probably a year, and then we go into a recession, although this recession was quite small. Alrighty, coming down to this recession here, as we can see, we have a massive spike, and the stock market drops 20% in the early 1990s. And again, we can see here, oil price comes up pretty high over a couple of years, goes up 230% as we fall into the dot-com recession. Same with the financial crisis, oil price. See right at the end here how it goes really parabolic. Whenever oil goes parabolic, we tend to fall into recessions. Now, this is the monthly chart. The S&P really hasn't made a high. It's been trading, it hasn't really gone anywhere since October. Right? It's about 5 months. Almost going into 6 months. And the US stock market hasn't made a high. It hasn't really gone anywhere. And as we can see, it is starting to make this falling kind of pattern. And when you put these things together and you look at the oil price, how it's reacted, it makes you go, okay, are we heading into a recession? With all the geopolitical problems we have at the moment, is a recession likely? And I think it's highly likely. Not only that, we've had gold and silver that have been on parabolic runs, which have pulled back. And I also think silver will not make another all-time high this year and will be a quieter year for metals this year. Before 2027 onwards, I feel like commodities will go on another big run. But besides the point, all signs are pointing towards a recession at the moment. Excuse me. I think that is the likely outcome of the market. Now, with the recessions in the US stock market, I think we could be looking at a 20% drop, potentially larger. And this is why I'm currently short the S&P on a long-term time frame. But I can just see that all these different factors are pointing towards it. Now, there's this other chart here that I love, which is credit to Benjamin Cowan, who makes great videos. But as we can see, this is a great chart for visualizing the business cycle. So what it is, it's the price, the S&P price, divided by the unemployment rate squared, multiplied by interest rates, multiplied by the year-on-year interest rates, and then divided by the money supply. And with this, we can see that this chart, if we can get the horizontal ray here, turn this magnet off, loves to come down to this level at the end of a business cycle. So as we can see here, starting at the end of this business cycle in 2001, after the dot-com bubble burst and the recession we had here, we build back up and we end with a recession in the 2008 financial crisis. Same thing here, build up a business cycle, and a bit of a black swan event with COVID. So you could argue that we've just kind of continued up and we're starting to fall down to the end of a business cycle. Now, the end of all these business cycles are in conjunction with a recession. As we come down here, recession. As we come down at the end of this business cycle, recession's induced. Recession. As we come down here, recession. Now, it is pretty clear to see that we have been trending down for a while now, peaking in 2022. Now, the US government is going to want to have a soft landing in an ideal situation. They want things to just slowly drop down for the economy to cool off for a bit and restart the business cycle. But with current geopolitical risks throwing us into the higher likelihood of a recession, it seems that it will not be such a slow soft landing, and this recession could potentially be induced earlier than expected. And who knows when this recession is going to be, really. It is very hard to call. But all these factors point towards a recession closing in. And every recession we have, the US stock market. What the hell's going on with my chart here? I don't know why. Every recession we have, the US stock market drops. As we can see here, from the highs to the lows, 57%. That was the financial crisis. And we've got 51% in the dot-com bubble. So we could be looking at a 50% drop in the stock market. Obviously, it could be less. In the 1990s, the recession was only 23%, roughly, give or take. And from the highs, we have already dropped 5%. So how low will this go? $1 million question. I don't know. 10%. This is where I got my take profit recently. Right now, it's around this 6,200 level. But could be 20, could be 30, could be 50. Right? Who knows how deep this will go, but we are approaching the end of the business cycle, and all business cycles end in recessions. All business cycles end in recessions. And this chart represents that. Not only that, if we go to gold divided by, the S&P divided by gold, we can see that the S&P has broken down against gold. Now, since 2016, the S&P has been bouncing off this level. Actually, I think it's better. Sorry. Gold is breaking out against the S&P is a better way to put it. As we can see, gold is making this pattern where it keeps getting rejected at this level here, 0.678. Keeps hitting it, and now it's finally broken through. This also tells me that a recession is nearing, because gold is outperforming the S&P, performing the S&P. Yeah, look, these are just the reasons for my thoughts as to why I think it's going to occur, a recession in the near future. Could be within the next 2 years. That's kind of the time frame, from 2 years till now, anywhere in that period, because it could be delayed. And the US government will try and print their way out of their economic issues, but if inflation's too high, you cannot print your way out of those issues, and recession will ultimately occur. That's what I think is going to happen. Going to silver now, just because I wanted to quickly talk about silver. because it is something I talk about every now and then. Whenever silver has parabolic runs, parabolic highs, well, as we can see that recessions occur around them with this one here. But what I want to get at is why I think silver's not going to make another high this year, and that I wouldn't actually say silver's a buy at the moment. I wouldn't. Well, you could argue it is, because if we're going to a recession in terms of opportunity costs, it's not bad to have a little bit of silver there, because I think there's much worse investments you could have your money in, apart from silver. But when it has these blow-off tops, right, these parabolic runs, here in the 1974, right, when silver had this run, 420% from 1971 to 1974. Once it had its parabolic top, it come down and fizzled out for a couple of years before going higher again. Same thing here. Parabolic top, comes down, comes up close to the highs, and fizzles out for a long time before making a parabolic run and fizzling out. Right? And then doesn't make another high until 2010. So we've got March of 2008 and didn't make another high till, what's that? September. Yeah. August, July. Yeah. July, August. September 2010. 2.5 years. 2.5 years. Better English. Didn't make until I made another high. And that's a similar situation I think we are into now. We've had our parabolic run. We've had our pullback. I think we're going to pull back even more. And then we're going to go on another run from 2027 onwards. So as we can see, the low here was in 2008 in December. And we dropped about 60% silver. Anyway, parabolic run again, and we've dropped back until we've had another parabolic top. Now, if we're looking at roughly a 60% drop, well, let's play the conservative side, right? But we're looking $50 to $55 US dollars for silver ounce. This is my price target range. $50 to $60. If silver comes down and trades in this range, which I think it will, because silver, after going for a parabolic run and having a euphoric top, it tends to fall more. More. It's not very good English. So this is why I'm using this YouTube channel as a journal, because I'm trying to improve my speech as well. But after silver has these runs, it often has a pullback and needs to cool off for a good amount of time. So it mightn't be till, late this year we go, pardon me, that's the pasta. We go into this range and then we start to build, as we can see here from this parabolic top. 200 and what are we looking at? 182 days. So could be looking, August, July, September this year, that time frame, and late this year, Q3 to Q4, I think silver will be trading around these levels. Could be earlier, maybe later. But I do believe silver will pull back and trade in that 50 to $60 mark before ultimately going higher over the next decade. That is where I foresee silver going. Okay, so I've spoken about the S&P, I've spoken about silver. I'll quickly talk about gold just for the sake of it. I think gold could definitely make a new all-time high this year, and silver not make an all-time high this year. I'm not saying gold will, but I'm saying that the chances of gold making an all-time high this year are higher. Just because, as you can see, when silver in this same recession had its parabolic top, gold was able to recover a lot quicker. Oh, was it? Actually, maybe that's not the best example. I think it was kind of similar time frame. Maybe a couple months earlier it was kind of able to get to the highs, but I feel like gold is just, look, no guarantees whether gold will make another all-time high. I just feel like gold is going to hold up better than silver, as silver is the more volatile of the two, I believe. And yes, that's why I think with a recession potentially coming, we got to find a spot to put our money. Where's that going to be? It's not stocks. It's not Bitcoin. Could be silver, but I think gold is going to outperform silver. If things do go down, gold should hold up better and recover faster. So, yeah, that is where I'm allocating my capital currently. Now, we've spoken about gold. Let's talk about Bitcoin real quick. Now, Bitcoin has this green candle. These green candles, I should say, going into the first week of March in every midterm year. So we look 2026, right on cue, and Benjamin Cowan talks about this. As we can see, we've finished Feb and we've had a good run up to 74,000. Now, this is probably where I see, actually we've gone to 75,000. This is probably where I see the top for Bitcoin currently. I feel like this is just a bit of a rally, bear market rally, as Bitcoin does, as if it's almost in a simulation, really, every midterm year. So I feel like Bitcoin's going to pull back and continue to trend down till Q4 this year, where Bitcoin bottoms every 4 years in the midterm year in Q4. October timeframe, it could bottom earlier in May perhaps, but there's always an event, like FTX or COVID or something that induces Bitcoin into a further drop into Q4. Looks like it's bottomed in Q3, kind of midway through the year, and then right on cue seems to bottom in Q4 each year. So later in this year, I will probably be trying to look at different entries for Bitcoin, just trying to stack some bags. Not too much, because I'm not a big Bitcoin investor. I like to stay away from it if I can. But with how cyclical Bitcoin's been, I feel like it is silly to pass up this opportunity, which we can quickly go through. So for future reference, maybe the weekly is better. Okay. It's going to be a long-ass, fuck-ass video. All right. So, we bottom Q4 2022. We top Q4 of the post-halving year every time. All right, let's look at this business cycle as we bottom here in 2022. But anyway, bottom here in 2018, Q4 2018, 10th of the 12th. Yeah, 10th of the 12th. I wasn't sure if this was the wrong way around. And we top in Q4 of the post-halving year or post-election year. Same thing here. What do we have? 2018. So 2014, 12th of the 1st. So this was really early 2015 is when we really hit the bottom. But as always, we topped in Q4 of the post-halving year. So with the cyclical nature of Bitcoin over these 4-year period time frames, I think it's silly not to look for opportunities. Now, I'm not going to try and time bear market rallies, where the little upticks in the market, because I feel like they're going to be really hard to judge. So I'm just going to let it trickle down and look for entries, in this could go as low as 30,000, really. Who knows with Bitcoin? But 30,000 to 45,000, probably the range I'm looking to start getting a few different entries. And this is going to be my last point of the video, because I've already gone on for way too long. Because I ain't going to be watching all this shit when I look back, but oh well. Buy what people hate and sell what people love. Rick Rule says this a lot, and I think it's very, very accurate in that when your next door neighbor starts talking to you about buying silver, that's when you know it's time to sell. That's when you know it is time to get out. If you sell the silver and everyone goes, "What the fuck are you doing? You're an idiot," starts carrying on, that's when you know you made the right decision. Sell what people love and buy what people hate. When Bitcoin was in the depths down here in 2022, 15,000, no one was interested in buying it. No one wanted to buy in here. In that 20,000 to 15,000 range, no one was buying. Right? Then retail comes in. Starts to trickle in. Oh, it's back at 60,000. Oh, it's at 75,000. Now retail's jumping in. Has a big spike up, comes down. That's when you know. When all the hype is around an asset and you hear it in the media and you hear people talking about it, and your best mate, who is not the best, does not have the best financial knowledge, starts talking about getting into Bitcoin, getting into silver, getting into gold, stock market, whatever it is. Fucking hell, this pastor's making me burp, cunt. A lot of swearing in this video. That's something we need to work on. But yeah, when price is starting to go up a lot and retail's getting in, and you can see that it's really getting overbought, that's when you sell it. If you always buy what people hate and sell what people love, you will do pretty well in this market. So at the moment, what do people hate? Well, soon it could be the stock market. Give it a few months, pulls back a bit, might not be a bad time to get in. Bitcoin. People starting to turn against Bitcoin. I mean, it's had a little rally here, but as it starts to drop back down, could be good opportunities to get in. Silver still obviously had its big euphoric top where everyone was real hyped on silver. So it's not hated yet. Gold's still at $5,000 US, so that's not hated yet. So with that in mind, and the fact that a recession is likely nearing, I think it's alright at the moment just to sit on my hands. Sit on your hands, see what the market does, see how things turn out. Oil's had its big parabolic run. Coming to the end of a business cycle. We've got a war with US and Iran. Man, it's really telling me we have a recession that will be induced soon. Really soon. So I'm sitting on my hands, keeping my money, a bit of money in cash, but keeping money in sectors, or in commodities, gold, silver. But when I say in sectors, I mean some junior miners that I think are going to be the better performers over this period. Because if I have to put my money somewhere, that's where I'm putting it. Not putting it in Bitcoin, not putting it in the stock market. So it's going in gold, silver, and miners. Actually, scratch that. Gold and miners. Because I think gold is a better monetary investment now over this next year than silver. I think it's going to hold up better. But anyway, uncertain times we're heading into. And what do I know about the market? This is all just for journaling purposes. I just have an interest in this stuff. I want to talk about it. So, yeah, that's all I wanted to talk about. I could probably sit here and talk fucking all day. But no one wants to watch that. I'm not even going to watch this. So, yeah, if you somehow made it this far, cheers, Buzzy.